This is an instructional video for Chapter 5, Section 3. I'm on the main page of MindTap. I'm going to go to Part 1. I'm going to go to Chapter 5, Cash Control Systems. I'm going to go down to Lesson 5.1, Dishonored Checks and Electronic Banking. I'm going to click on the End of Lesson Review and select the working papers. Here I'll be completing the 5.3 work together. On 5.3 work together, we've got a tab for transactions. There are 3 of them. And we have a tab for chart of accounts to identify those accounts we're dealing with. And then we also have a journal page, page 15 of the journal. In this problem, what we're looking to do is we have received notice from the bank of a dishonored check. So what this means is this woman, Christine Iverson, wrote us a bad check, or a check where she had insufficient funds. She wrote us a check for $126 to pay off a debt that she owed us, but she didn't have that much money in her account. Now, the bank is charging us, our business, a $25 fee. Doesn't seem to make sense, I know. But we are now out $126 that she had written us, and we're also out a total of $25 for a total of $151. So to record this, what we'll do is in the journal, I'll record August 18th. And the first thing I'm going to do is I'm going to remove the $151 from our account. That is for the $126 that we originally thought we had, and then the $25 fee that the bank is charging us. So I will cash credit $151 from our account. The other account that we're dealing with is accounts receivable Christine Iverson. So if we check our chart of accounts, we have this here. So earlier, Christine Iverson had received goods or services from us, and that's why she had owed us $126. Now what we need to do is we need to charge her again for that $126 plus the $25 fee that the bank is charging us. We're going to pass along that fee to her. So in the general account title, we'll record accounts receivable, Christine Iverson, the document number or the source document that proves that this transaction occurred is Memorandum 312, and we will increase what she owes us, $151. So for this transaction, we are removing $151 from our account, the $126 that we originally thought we had, and then $25 which the bank charged us for a total of $151. And then we're charging Christine Iverson $151 for what she originally owed us and the $25 fee for writing us a bad check. And that takes care of a dishonored check. The next 2 transactions are for when we complete, when we pay for things using electronic funds transfer or a debit card. It's done exactly the same way that we would do any other kind of transaction when we are paying with cash, but we're going to be using a different source document. So for the first one, we have paid cash on account to Schwartz Enterprises using EFT. So if we check our chart of accounts, we're looking for Schwartz Enterprises, and there it is. This is going to be to accounts payable, Schwartz Enterprises. We owed them money, and now we're paying that off. So we will cash credit $270, and we will general debit $270 and thus reducing what we owe to Schwartz Enterprises. And our source document is going to be Memorandum 313. When we've done this transaction before in the past, we've used a check, but now that we're using electronic funds transfer, or we're transferring something electronically from one financial institution to another, we're going to use a memorandum. Next, on the 21st, we are going to purchase supplies using a debit card. So the 2 accounts that we're dealing with are supplies and cash. So in this case here, I'm going to record this as supplies. Our source document is Memorandum 314, and we're going to increase supplies by $62, and we are going to cash credit for $62 because we are reducing our cash using a debit card. And that takes care of the transactions for 5-3 work together.